Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay. So I am now recording, guys. Everyone who's here live, thanks for stopping by. And again, if you have any questions, just keep it till after we're done here. Now, let's get into the news, and then we're going to hop into the charts. So starting off for next week, we have a pretty eventful week. So Monday, we have the PMIs for manufacturing. So this is going to be pretty good to see. Again, it's not going to move the markets incredibly, but it is good to see because we're going to get a good idea of what we can expect for next month since PMIs are more forward-looking. Now, going into Tuesday, we have factory orders. Again, this is going to be a really good view to see how our manufacturing business is going. Are we decreasing, increasing in rate? So we want to keep our eye on that. Other than that, it's a pretty slow day. Once you get through 10 a.m. Eastern time US for Tuesday, it'll be pretty much a very chill day after that. And then the big day is May 3rd, Wednesday. We have a lot of stuff coming. We have the employment change, we have services PMI, we have the big thing, we have oil inventories, and then the biggest news of the week, we have the interest rate decision, and then FOMC. Now this is being forecasted for another 0.25 basis point raise, and in my opinion, I would expect that. I'd be very surprised if we don't raise 0.25 or raise higher. We're probably going to stick with the forecast. Jerome Powell's been very clear on that. Now, there has been a lot more information that's come out about Jerome Powell. Unfortunately, depending on your perspective, fortunately, he was actually tricked. So you can actually see this video online. Some hackers actually tricked him into talking to them, thinking that he was talking to Zelensky, the president of Ukraine, and he revealed that essentially doesn't matter what the data says. He's going to raise rates 2 more times. Now, if this proves to be true, we're going to find out. But it seems like it was completely above board. He was just fooled. And yeah, so we could expect 2 more hikes coming, no matter what the data says. That's literally what he said. Now, maybe he'll revise his statement depending on this coming out, but I kind of doubt it. So we'll keep our eye on that. Maybe he'll address that when he talks, because that that video is everywhere to be seen. So again, if you haven't seen it, just type it in. Jerome Powell talks to fake Zelensky, and you're gonna see it. And yeah, so expect 2 more rate hikes until otherwise. All right, next is May 4th. So we have the U.S. trade balance and then the initial jobs claims. Big news coming on May 4th, 8:30 a.m. Eastern time U.S. So this is going to definitely move the futures markets quite a bit. You want to keep your eye on this. And then to finish off the week, May 5th, we have the unemployment rate and the non-farm payrolls. Again, big news. It's going to move the markets. It's going to really change the view of the dollar, right? So we're going to get a good look at what we can expect on May 5th, on Friday, of how the dollar is going to be looking going for the next month here, okay? All right, now let's hop into the charts, see what the dollar is telling us. So it's been pretty interesting watching the dollar. We had a pretty strong day on Friday, and then as we came into the close of the candle, we actually started selling down. So that gave a lot of nice bullish momentum on Friday for a lot of these assets, the U.S. indexes and in crypto. Now, what I am looking at now is it is overall playing out as expected. We are trading in this 5+ year support zone. That's this blue zone here. So we are likely going to continue to go sideways around this zone for quite a long period of time. Now the question is, are we going to hold this higher pivot here? Because we have confirmed this higher pivot since we've had this low here, and then to the left and right, it's a lower low. So this higher pivot from this low pivot, this could be the start of a short-term little rise up, something like this. Or are we going to have a breakdown this week, depending on the news? Or are we going to have a stream up, depending on the news? Now, in my opinion, it's more likely we're going to kind of sit where we're at for some time and consolidate. And we're probably going to have somewhat of a upward grind getting towards the top side of this blue zone, as I do think 103.65 is short term the most attractive area for it to get to before a major rejection down. Now, my opinion will change depending on what the news says as we get more of this data coming out. Okay, so if we get like data that really insinuates weakness in the dollar, just watch for it to start breaking back down towards 100.39 and really back into this monthly bullish fair value gap, which goes from pretty much 100 around a 1013 to all the way down to like 99.4. So we have a pretty big zone here, but even if we do come into the zone, it's still a bullish liquid zone. So keep that in mind. It's very unlikely, barring massive news, where we just stream down. Okay, it's more likely we're going to sit where we're at for a long period of time and then slowly make our way up back towards 103.65. All right, next is the Dow. So off of that dollar weakness late in the day, we had a nice tap into this level. I did not think that this fair value gap would have held, but it was very impressive seeing this nice pop up over the last 2 days, Thursday and Friday, because the dollar was showing signs of weakness. And then we had a nice move after hours on the Dow, coming towards the top side of this bearish fair value gap. Now, depending on how we open up on the futures, in my opinion, we're probably going to tap a little bit higher, going towards 34.5, and then looking for a slowdown, probably a retracement back down, back towards at least 34,000 to 33.8. Okay, so I do think we have short term some upside, but we're likely going to see some weakness as we get closer towards FOMC, because remember, there's going to be a lot of indecision, a lot of fear. So usually during that time, things will stop until the data gets out, and then we'll see what happens after that. But most of the time, you start to see the market slow down as we get closer towards FOMC. Next is S&P. So same story, beautiful breakdown. It just missed the fair value gap. It just missed it, or might tapped the very top of it and then found the strength to go up again off of dollar weakness. But this is also trading into this bearish fair value gap zone. So again, we're going to watch for this to break up a little bit higher as it comes towards this high pivot. And you also have this little fair value gap within this larger fair value gap at around 4,200 to 4,230. So we're going to watch for this to pretty much probably hold as a resistance zone and then cause a slowdown as we get closer towards May 3rd. Next is NASDAQ. So this is also tapping into this bearish fair value gap, and this one looks quite good to hold for some time until we get towards May 3rd. If we get bullish news that leads to strength in the US indexes, look for this to just rally up hard going towards like the 14s. I can definitely see this back into the orange zone. Okay, but as of right now, same story for all three indexes. They're all trading into this bearish liquid zone, bearish fair value gaps. So we should be looking for a potential slowdown, barring any major news. All right, next is oil. So oil broke down and it's filled the gap. So this is the gap from the Saudi Arabian supply cut. So this was to be expected. I even mentioned it. That's why I have it highlighted here. Watch for this gap to get filled. But now, in my opinion, be on the lookout for upside. Okay, be on the lookout for upside. We're going into the summer months in a couple months here, and we're also going to see more and more demand for oil. And there's even a story that's come out now where you have Europe, a bunch of countries that are buying oil at a premium from India, and that Indian oil is coming from Russia. So it's like they're all playing this stupid game, trying to become green energy efficient, and they can't because the tech isn't there yet. So they're all paying premium price right now for oil, and that's going to catch up on the chart. They're probably paying anywhere from $80 to $85 a barrel from India, and you're going to see the chart do the same thing. This is going to go up because the demand's not going to slow down. And as we come into the hotter months, you're going to see a bigger demand in the US for oil as well. So watch for oil to go up, unfortunately, for the rest of this year, in my opinion. You may see some dips here and there, but I do think by the time we get towards Q4, we're probably going to be seeing an $88 to $94 oil per barrel. Okay. Next is gold and silver. So gold and silver are holding up pretty well, especially gold after this impulsive move. Now, this is because of dollar weakness. If the dollar continues to be weak, I would be very surprised if we do see it just immediately blast off. We'll probably start seeing it have a bullish consolidation, which is actually better. So if you want longevity in this move, you do want to see it actually consolidate, a bullish consolidation off of a weak dollar. That will then lead to a much more stable leg up. Now, it's still more likely that we do break down and grab at least into this zone here at 1930 to about 1890. So this is still the most likely path, but if the dollar does remain weak, then we could look for a bullish consolidation that will then ultimately lead to new all-time highs, okay? Either way, whether we break down here or consolidate here, I'm still super bullish on gold. I think gold is destined to take the highs of the year. So watch for this to eventually break up. Whether we're staying here or breaking down is kind of irrelevant to me. Now on the swing trade service, I've not really played any gold positions this year. Not since really we had longs down here. I've kind of taken a step back just watching it. Now, if we do get a breakdown, I will start to be looking for, gold miners and gold ETFs to start looking to start long positions. As of right now, I can't really touch it. It's just too overextended and it's too expensive. Okay, so even if we do break up here, I'm gonna have to be okay with being on the sidelines until I get an actual opportunity to jump in. Okay, so I'm not gonna try and chase anything. If it breaks up from here, it is what it is. It's okay. But if we do get a chance to get in off of a retracement, be sure I will. So if you're in the swing trade service, be on the lookout for that. Next is silver. So silver, again, same thing as gold, holding up, playing these liquid zones. Now, a lot of these liquid zones have been filled, but generally you see the consolidation. So you want to respect the consolidations. It's all just building out this structure here. Now, in my opinion, you're probably going to see something like this and then a breakdown. So kind of like a Adam and Eve double top structure on silver, and I think you might get something similar on gold. And this structure will then lead to at least coming in to fill as much of this up move as possible. Coming in probably towards at least 22.8, and then eventually, if we get more continuation, because the dollar might end up getting stronger after the news, you might see this come all the way back down to like 21.5 to 22 bucks. Okay. All right, now let's get into Bitcoin. See what's going on with Bitcoin. So Bitcoin, all of crypto has been extremely active. It's been very fun trading it and watching it. So currently right now, not a bad day on Bitcoin right now. So we have filled this fair value gap here on the daily, okay, but this is, I believe, a monthly fair value gap. So we are closing the monthly candle today and the weekly, so this is gonna be pretty important. I actually want to touch on the monthly real quick since we're about to close this today. So if you look closely, in a nice breakdown here, and now we're trading up into this consolidative zone. Now, are we likely to slow down here? Potentially. I would say it's actually kind of up in the air. We could actually just have another break up coming into this really big bearish monthly fair value gap up here. So about 32,000 all the way up to like 36, 37, 38,000 is definitely on the table. Now, what I am watching for now is the monthly close here. Okay, so the monthly close is what I'm most interested in. And if you see this black line right here, so let me highlight this line right here. This line is showing you the last month's high. Okay, so we are trading above that. Now I want to watch to see if this monthly candle will close above last month's high. Now, if it doesn't do that, doesn't mean we're going to break down, but what happens, it does mean the momentum is slowing. Okay, so if you're bullish, you want to see this monthly candle close above 29,182 on the Bitcoin index chart. If it doesn't do that, all it does is starts to imply a slowdown. Now, it doesn't always mean it will slow down, but it does imply it. We are also trading in this into this weekly bearish fair value gap, and we are threatening this monthly bearish fair value gap. So we are in a zone of potential failure, at least a short-term retracement over these couple months. So if we break into here, you could be looking for a 1 to 2 month correction and then continuation. Okay, so don't get super bullish here. Okay, you don't want to get super bullish here because the move to the upside is going to be limited from up here, at least compared to down here. All right, so we want to keep our eye on this. We want to see if momentum will stay to the upside, or if we're going to actually break back down under here throughout today and then end up closing the monthly candle through here. Okay, it's too early to tell. If I look at it right now, it is implying more upside. As you can see, we're holding this level. A lot of fighting to hold this level. So if we get that continuation up, we're going to come up towards this 4-hour fair value gap right here, and this is going to be a zone that the bears will try and defend. So 30,377 to 30,691. You can see we're actually making our way up to there now. So this is going to be a zone that they're going to try and defend. Whether they succeed or not, we don't know. We'll just have to watch and wait and see how it plays out. The way Lemon Garden's playing this out, we're trying to build out much bigger positions. Now I have a short on Bitcoin. Now if Bitcoin starts to break up towards these levels, which is to be expected if it should. Again, I was very clear. The odds are not in anyone's favor on majorly, I guess I should put it. So if we do break up, I'm going to be looking at the same places I've been looking, 32, well, really 34,000 to about 38,000 to start building out the short bigger, and then potentially a spike going towards 40 to 42. Once that happens, you should be on red alert for a major correction down. Now, if we do break up towards those levels, the major correction down doesn't mean new all-time lows. It could just mean a higher low is going to be made from the low we made in 2022 here. Okay, so this low down here, we could be looking for, once we break up to those major levels, a breakdown that makes a higher low, and then that higher low will lead to the next major bull move for next year and then the years that come after that as we get closer to the halving. Okay. All right, everyone, that is it for the market overview. Hopefully I answered some of your questions if you have any. If you are not in the Discord, make sure you join the Discord. That way you can be in the live like everyone else here. And it's also the easiest way to get in contact with me and ask me questions on a regular basis. All right, everyone, I'm going to kill the recording now. Thanks for stopping by for the video. And everyone who's here live, thanks for stopping by. And we'll hang out. So let me kill the recording.